So I saw this press release from the Reserve Bank of India about IndusInd Bank. Apparently, there's been some speculation about its financial health. What's going on there?
Well, actually, it seems like there were some concerns bubbling up, likely triggered by recent events at the bank, like the extension of the CEO's term and some accounting discrepancies. The RBI, stepped in to reassure everyone that the bank is stable.
Stable, huh? The press release mentions a capital adequacy ratio of 16.46% and a liquidity coverage ratio of 113%. What do those numbers even mean?
Right, so the capital adequacy ratio or CAR is basically a measure of a bank's capital relative to its risk-weighted assets. Think of it like this. It's the bank's cushion to absorb potential losses. A higher CAR, like IndusInd's 16.46%, indicates a stronger financial position. And the liquidity coverage ratio or LCR, that shows whether a bank has enough liquid assets to cover short-term obligations. And that's the 113% LCR means they're comfortably above the regulatory requirement.
Okay, that makes sense. The RBI also mentioned that the bank has engaged an external audit team. Is that related to the accounting discrepancies I saw mentioned elsewhere?
Exactly. The bank disclosed some discrepancies in its derivatives portfolio, which is expected to impact the balance sheet. The RBI directed them to get an external audit to fully assess the impact and fix the issues.
Derivatives portfolio, that sounds complicated. Can you give me like an easy to understand analogy?
Sure. Think of it like a farmer who sells futures contracts for his crops. He's hedging against price fluctuations, but if the market moves against him, he could take a hit. Banks use derivatives to manage risk, but sometimes things don't go as planned, and accounting for these instruments can get tricky.
Right, I get it. The article I read also mentioned that PwC was appointed for an accounting review. Are they the external audit team the RBI mentioned?
Well, yes. Also, the Institute of Chartered Accountants of India, ICAI, is expected to review the bank's books. It's like when you're sick, you might get a second opinion from another doctor to make sure everything's on the right track.
So is this a big deal or is the RBI just being extra cautious?
Well, it's always good to be cautious when it comes to financial stability, right? The RBI is taking proactive steps to address any concerns and ensure transparency. Plus, the statement specifically tells depositors not to react to speculative reports. So they're trying to prevent any potential panic.
Gotcha. So bottom line, IndusInd Bank seems to be okay for now, but I imagine people will be watching closely to see how this whole accounting issue gets resolved.
Oh, absolutely. The RBI statement is a good first step in reassuring the public, but the bank will need to demonstrate that it's taking the necessary steps to address the issues and prevent them from happening again.
You know, it's interesting how quickly these things can escalate. It seems like one little problem can lead to all sorts of speculation and uncertainty.
It's true. That's why transparency and clear communication are so important in the financial world. And just a friendly reminder to everyone, especially with investment related topics. Disclaimer, we advise investors to check with certified experts before taking any investment decisions.
Totally. So, what's the takeaway from this whole IndusInd Bank situation?
The key thing is the RBI's proactive approach. By stepping in and reassuring depositors, they're trying to prevent a potential crisis. Plus, the fact that the bank is already taking steps to address the accounting issues is a positive sign.
Okay, so before we move on, let's just recap the main points. The RBI has stated that IndusInd Bank is well capitalized and financially stable. They've directed the bank to conduct an external audit of its derivatives portfolio due to some accounting discrepancies, and they're urging depositors not to panic based on speculative reports.
Exactly. That pretty much sums it up. Now, let's move on to